Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me at @Finance, and if you want to join our community, finding-value.com, where we look for opportunities, find opportunities, and capitalize on those opportunities for investments. I share what I'm doing. I share my opinions around it. You can follow what I do. We just went over a little bit of portfolio allocation and my opinions around it. That is uploaded to the website that you can see. And if you're interested in joining, we do have a special coupon code. It's $25 off, which ends up being $25 a month on the first month only on the monthly membership. It's a $500 charge on a yearly membership if you want to sign up for an entire year, and you can always swap from a monthly to a yearly if you'd like to do that. So special is that code. So here's myself. I was kind of scrolling through, it's kind of crazy. Twitter is just an FYI. I mean, I get like a couple of feeds. It used to be Bitcoin was pushed really hard. That's kind of gone. Every once in a while, they push the naked chicks like dancing or whatever. They push that every once in a while. And then it changes to like financial stuff, because that's usually what I look for, try to find. But they keep pushing all this other crap. So this time I'm putting up a little bit more of my posts, so we can go through kind of my stuff more so, because there just isn't that much out there that I find highly interesting. So I know people are pretty bearish on silver mining companies and gold mining companies at this exact moment. That everybody's talking about a pullback, a consolidation, and that very well could be the case. But what I like to do is I like to look at the long-term stuff. The long-term stuff here, this looks fantastic. This is SILJ divided by silver itself. This is a big breakout here in 2016. And here we are breaking the falling wedge to the upside. One hump, two hump, three hump consolidation, and a breakout. So if we can get a consolidation, or if there is one, I really wouldn't worry about it. Change your mindset, be a long-term investor. If you purchase in this corner here, I wouldn't lose the position and get scared out of it myself. Now, I'm also not 100% in silver junior mining companies, so I can weather whatever storm comes. I have a smaller allocation to it, not small, but it's not gigantic, which keeps me alive. It keeps the portfolio progressing forward, because I'm not over allocated to any one sector or position. But this still looks fantastic to me, and I think we're going to go much, much higher. This is SILJ divided by SIL, which is the more larger mining companies. Can you see that we're outperforming here? On the right-hand side there, we can see that outperformance moving up. What that is a bull market. Juniors don't outperform SIL in a bear market. They outperform in a bull market. So I think this is signaling that we are still in a bull market. Coming over to GDXJ divided by gold, we can see the big selling pressure candlestick. This is on a monthly candlestick, and this is a bottom. We're still in the bottom. We're still in the bottom. How do you like it? Winning at life entries 2024 and 2025 in some of these junior mining companies. You buy at the lower if you were good enough, because there was a lot of really good setups in 2024 that you could purchase on individual companies. There's a whole bunch. And here is SILJ divided by gold. I know not a lot of people put SILJ versus gold. They usually do it against silver. And that looks absolutely fantastic. It's a squeeze into the corner, three hump consolidation, and a breakout. Now, sometimes you get a return move after the breakout, like we're getting, perhaps, and then we're going to move up from there. So we're still in a bull market. I don't think that we're going to just all of a sudden crumble away. And I think that all the dynamics behind the bull market are still intact. So there's my opinions on it. I know a lot A lot of people are calling for a consolidation pullback. That very well could be the case. But on the long, big picture view, still looks okay on the long-term view. Not a lot of people are talking about steel or iron ore. Looks like this. I don't know why. Let me do this here. So this is steel. We have a falling wedge into a double bottom, a break out of the double bottom, and now we're starting to break out of the last resistance. So does this look good? Yes, it looks good. Now, here's the thing. There are certain companies that are still down here, or this is pulled back, and you can buy them like down here. Those are the companies that I'm interested in. And there's certain sectors within steel, iron ore, and whatnot that have fantastic entry points, way better than SLX breaking out here. And again, that's where I share those names on the website to everybody in the community, where they get down quite a bit here. Now, here's another thing that a lot of people I don't think realize. A lot of the really big outperformers during the last bull market were found in iron ore and steel. Now, do we have the same dynamics in play today as we do back then? I would say yes, we do, and maybe it is a little bit different. So I don't know if it's going to be 100% the same. I don't know if the dynamics will be exactly the same, where iron ore will be the outperformers for this bull market or not. But I will say I want some exposure to it. I want some exposure to it. So there's steel, it's breaking out, and there are other better opportunities in companies that are like way down here in certain sectors. Lithium bottoming, getting lit, which is the ETF. I'm not buying lit. I'm already in lit. I've been in it for a little bit. But this is lithium. I think there's a huge opportunity. This to me looks like a bottom. You can see that the momentum is slowing down. You can see the volumes kicking up. And then eventually, I bet you this is going to turn up right where we're at. It's going to start to turn up. Now, the equities in lithium have already bottomed. They're already heading higher. And I'll show you with the lithium ETF. This one's lithium hydroxide. This is lithium hydroxide futures, LTH1, and this is LH1, which also looks like it's bottoming. So whenever you see the momentum real strong like this, usually it takes some time to work the momentum to get sideways. See how we're sideways down here? And now we've got the big kind of up move on that big green candlestick and then the small selling pressure. This looks prime for a move higher. It looks prime. And then the lithium stocks could be an accumulation cylinder. It happens on the right-hand side of a bottoming. So this was coming down and bottoming. Maybe I can, yeah. So so we have 1, 2, 3, 4, 5, 6, 7, and then you can see us ripping higher here. Your entry point was the falling wedge into a double bottom, which is at this corner here or here if you're buying off a support. But right here is your entry point in there. And then we should be riding it. Ride. You guys have heard me say lithium on Capital Cosm some months and months ago about steel and iron ore and some of those things and some of the interviews I've done. But this is looking fantastic. And I think that we're going to blow way above the previous high here. So we'll blow 90 through 90 like nothing with time, not immediate. Not stating tomorrow. I'm saying the big trend over time. We'll go through it. And there could be pullbacks along the way. So I'm not stating this is going to go straight up, but it looks pretty good. Notice any similarities. This is Apple. 1, 2, 3, 4, 5, 6, 7, and then the Livermore accumulation break that went way up. Look at REMX. Do you see the same similarities here? Now, what I'm going to do is I'm going to grab Apple. This is Apple here. I'm going to grab its fractal. There's the fractal, the pattern. So fractal means pattern for the most part. It repeats over time on different time frames. I'm going to copy it. And then I'm going to go back to REMX and just see how this kind of lines up. So there's REMX. And there is what I am kind of demonstrating, right? So what I think is occurring is I'm going to have to squeeze it up a little bit. So I think that this is what I'm seeing here. And if you really like look at this, right? I'm going to bring it back up. You guys see that this is the same type of bottoming pattern here, the fractal bottom, and you see kind of how this moves up, and then you get this upward move, comes on down into this bottom pattern. See how that all looks? You see on the right-hand side how this bottomed? See how this is bottoming? The fractals are very, very similar. See the dead period in the corner? I just find it highly interesting to see so much similarities across different patterns over time. Now, if you look at the bottom here, this fractal pattern for REMX was from 2016 till today. It's a 10-year pattern. Apple, that pattern that we were looking at, which is down here, this pattern was from 1982, which was the bottom of the stock market in relationship to commodities. That was the bottom of the bottom. And then it went all the way to March of 2003. March 2003. That is one heck of a sideways move from here to here. Isn't that crazy how little this moved in relationship from 82, 83 all the way till 2003? And then it created this big accumulation cylinder, and then it just went ballistic. You should look at that move. Now, could this happen in rare earth metals? I don't know. Maybe. Maybe we get something ridiculous like that, where we absolutely blow the doors off everything here. Now, I know a lot of, I've spoken about REMX. There's some companies in the short term, I would not say are ideal entry points per se. They've moved up vertically in some of the companies, and some of the companies can still get a potential pullback in the short term. I'm not saying REMX, the ETF, but some of the individual companies, as some of those companies have really moved a lot in the very short term. So what a lot of them have done is they've created this base here, and they rip out of it, and then a lot of the times they come back and do like a retest on top of it. That's what I mean by we could get a pullback before continuing higher on some of the companies. So I just wanted to make that clear that because I'm saying this does not mean that your small speculative junior rare earth company is going to the moon tomorrow. I just want to make sure everybody understands that. So coming on back, JC Parrott's, he's got his eyes open at, that's a contrarian trade. That's it. Brent short only positions are it's like an anomaly here. So we have a lot of people who are short. Could that create a short squeeze or a slingshot cheetah to the upside? It could. It could. I'm not saying it will. I'm saying it could. We'll see if we can get some momentum to the upside and squeeze these guys. Because there's a lot of people who are short oil. And I mean, for me, there's no way I would be short oil here. I'd be long. I would be long because you've got everyone else who's short and the sentiment is pretty bad. We're also right at, we're underneath the cost curve for some areas. So there's my opinions. Warren Buffett says, dream big and be prepared mentally and financially to act fast when the opportunities present themselves. Every decade or so, dark clouds will fill the economic skies and they will briefly rain oil. Yes, oil. It will rain oil. Raining gold would hurt. It'd hurt the noggin if you get hit in the head with some gold. There are opportunities. There are windows of opportunities. And those opportunity windows, they sometimes are longer, sometimes they're short, depending on where you're at in the cycle. And it depends what the opportunity is and where it is. A lot of it changes. I would say to buy really low entry points on a lot of companies in precious metals mining companies. That was like a year ago or 2 years ago, depending on if it's a producer or developer. 2 years ago for producers, about a year ago or so for the developers. And they've all run up a whole bunch. So then what you do is you just look around. You say, what's down? You look around and you say, okay, this sector's down, like oil. Then you start to accumulate oil, which I would say was a good entry point about 6 or 8 months ago. Like, let's say April, 6 months ago. April was the bottom, I think. April of 25. So the gold and silver companies, they were good about 2 years ago to a year ago. And then 6 months ago, it was oil. Right now, there's other sectors that are really good. 6 months ago was rare earths. And then there's other, coal and iron ore and steel and all these other ones and copper that have been between April and today that you can find these incredibly good deals on. So the opportunities may be brief, but they cycle. They cycle between sectors that you can pick them up over time. With copper breaking out and gold consolidating, the copper to gold ratio, the business cycle proxy, will likely push higher. That's positive for commodities and risk assets. So here's copper breaking out, right? Let's see what the copper to gold ratio suggests. Oh yeah, this looks fantastic. So, and I know people, they like seeing breakouts. I like seeing very low prices in the bottom of a falling wedge because that's where I buy. So this is copper versus gold. We have a falling wedge into the corner, and I think this is going to break upward. I think we're going to see a big move out of copper. A big outperformance. And this could be a big, big move in copper, like one of these moves, right? I think we could maybe get up here or something. And I know that goes counter to a lot of people. Everybody thinks gold's just going to keep going and going and going. This is this is right on support, guys. And this is where I get all excited. Now, the copper companies, they are not down there. They're already seeing positioning to basically all-time highs. So do you think copper is going to outperform gold? Well, people are piling in copper. Look at the volume here. They're piling in this. This is your double bottom. And this, we did buy some here on the website, and obviously before that too. But this is just at resistance, and we're doing a flag pattern to break higher. This looks fantastic. Absolutely fantastic. Now, would I buy a new copper position up here? I would be looking for stuff that's down. Now, so I just showed you a ratio, but the equities are flying. There are maybe a few opportunities, but this is starting to break here. We're going to get a big move. There's your double bottom, 16, 20, 20. The slingshot out, the retest. This is a good buy point in 2023. And then we're breaking out into a big bull market. This is it. This is it. Says, was it margin call? This is it. This is it. Karl Marx, psychology is more important than accounting and finance. That's what you need to work on. Psychology. A lot of people, they want the names. Well, what's good to buy? Can you hold it? Can you hold it? What's your strategy to hold it? They don't have a strategy. They don't know what to allocate. They don't know what position sizing to throw on it. Those are all important things because it helps with psychology. It helps with holding. If you put all your money in uranium stocks and put it all in one stock, that doesn't even make money. Is that a smart thing to do? You think you're going to be crapping your pants? Maybe you don't even know enough to be crapping your pants. I think there's a lot of people that are like that. But they just see stuff, they throw it in there, and then they just pray and hope. Hope is not a good strategy. Russian petroleum products exports are at their lowest levels in years. I went over that last time. So that's where we're going to end it, guys. That's what we've got. We're going to end it on the psychology is more important than accounting and finance. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials the coupon code. And that's all I've got for today. So we'll catch you next time, guys. See ya.